Hello, everyone. Welcome to the PwC Tax Bite podcast series. My name is Pieter Dree, director in the global tax team, and I'm hosting this podcast series with today three experts in the area of building your tax function future-proof. With me today, Kim de Smet. Kim is part of a global center of excellence based in Belgium around GAP to Stat and all the areas around compliant local statutory ledgers, let's say across the globe. Jens Loet. Jens, part of the tax accounting team in PwC, is helping clients with various tax accounting questions like US GAAP, IFRS tax reportings. And last but not least, we have Tom Heremans. Tom is assisting clients of PwC with tax accounting reporting, advising companies around processes and efficiency around that. So with these three people, I think I have the perfect audience here to talk about future-proof tax functions, because that's what I want to talk about today. And in the discussions that I have with various businesses, it always comes up: shortening deadlines, timing, reportings, etc. It creates a huge challenge to be on time, to be compliant, and to be transparent. And that's what I want to explore with my speakers today. And Kim, I want to start with you, because I imagine it all starts with having correct and good statutory numbers. Is that right? Is that the starting point for everything?
Absolutely, Peter. The local statutory numbers and more overall the statutory books are indeed the basis for getting your direct tax process into good shape. It's also typically the first thing that is being requested during a tax audit. And as companies are mostly operating globally, not only do these statutory numbers in local GAAP matter, but also the link and how they reconcile to the group numbers, which is typically US GAAP or IFRS. And we still see that companies are addressing the group GAAP numbers and processes totally separately from the local GAAP and the tax processes. But there's certainly a trend ongoing where we see that these suboptimal processes are getting replaced with more robust and more integrated approaches. And this creates not only increased standardization and efficiency gains, but it also increases comfort and transparency. Now, what is certain is that there is no one-size-fits-all solution. There is no ideal blueprint on how to do this. The best fit operating model for any international company will vary from country to country, from entity to entity, and it can change over time. The drivers to define this preferred operating model are very diverse as well. First of all, there's a company's strategic views on data and processes, on technology and tools, on people and organization, so the typical three buckets. Then there's everything that has to do with the complexity of the business, complexity of local requirements, but also the maturity of the business, volumes, materiality of different entities, you name it. Regardless of whether the company wants to address these statutory and tax compliance processes internally, or whether they want to leverage on a co-sourcing partner to the maximum extent, there's a solution for every organization. And we see this as a spectrum where on the one hand, companies are implementing or are transforming to fully optimized and localized ERPs. So with maximum automation, think about primary and secondary ledgers. And at the other end of the spectrum, companies are applying what we call managed services approach, where they are leveraging on a service provider's state-of-the-art technology. Now, whichever way you go, the focus is on improving data quality upstream, is on more efficient and robust processes driven by smart technology, and integration of the different streams and the teams involved, be it on a central level or on the local level when we think about shared service centers or centers of excellence.
So thanks, Kim. And indeed, the quality of the data is the cornerstone of everything. And I think you mentioned it as well, but what I hear coming back in discussions around tax functions is always these three buckets that you have to improve your tax function: data with the processes, tools, technology, and then of course the people and the organization of the tax function. And this first topic, data processes, is coming up a lot in the discussions that I have. And Tom, I'm interested to hear from you. Why is data management so important? Why is this on the top of the agenda of businesses?
Thank you, Peter, for having me on your podcast, first of all. I think you're right in saying that tax functions are more and more looking into data management, and together with that, to opportunities for small automation. As you know, I think this evolution, and it becomes higher on the agenda because of global, European, and local legislation, as well as new practices from tax authorities that we have seen evolving the last years, where they request more and more data. And I think companies consider it more important to have consistent data over all jurisdictions, and I've seen that becoming a real must. And I also learned personally that tax functions are more and more scrambling to get the required data and to submit data within the deadline with local governments. And I think therefore this item has been elevated on the agenda. I think if you look further a bit down in history, I think we have seen the first big move with BEPS 13 transfer pricing documentation requirements and country by country back in 2015 and 16. I think tax functions started to assess their global tax accounting tooling and see whether they could complement that tooling to capture all data in terms of CBC reporting. And more recently, they again had to deal with another directive, being DAC 6, on the reporting of the cross-border arrangements. And again, it consisted of seeing how to capture all relevant data from local jurisdictions to convert that data into a structured data format and submit that data with local tax authorities. It are all similar processes, but again, they come more frequently. And I think a perfect example of that is DAC 7, because that's again on the agenda of the local countries for implementation. And DAC 7 will again require an electronic machine readable format for submission in the countries. And I think all these directives on administrative cooperation, but also other local initiatives require or elevate the need to have consistent data at different levels and at different points in time available towards the tax function.
And maybe also adding here that we see additional requirements indeed being imposed in more and more countries around everything that has to do with e-reporting. So a typical example is SAFTI, which stands for a Standards Audit File for Tax, but it's not standard at all. So every country just sets up its own format. We also have e-ledgers. In very rigid formats that need to be maintained all throughout the financial year. And all of these are not just theoretical requirements. We've seen actual examples of companies being imposed with enormous fines because of the fact that they weren't able to generate, for example, this e-file in France. Or that the integrity of the books is being questioned, or that the official accountant is being held accountable because some of these requirements are not met. So the materiality of the consequences increases as well.
Yeah, and I think that touches up on some important points. If you see the speed of the change and the level of detail of the changes, I think the time that statutory and tax compliance processes are limited to an annual event is outlived and transferred to history books.
Yeah, Tom, I fully agree with you on that one. And if you look at also, you talked about the speed of delivering information, but I think also an important element is the penalties. What I experienced recently is in a tax audit where certain documentation had to be provided, there was a very strict timeline for that, a number of days, and if information was not provided, automatically a severe penalty was applied. And of course, it was not the end of the audit. So that just meant that this penalty was already due and that then the audit could continue. I think also what I feel coming back is the challenge that information, like you discussed it, the DAX 7, DAX 6, SAFTI, etc., that this is all information shared with the authorities, tax authorities or other authorities in the country, where we gradually see also that transparency rules take the next step, where that same information will have to be shared also to the public. We're talking about public CBCR, which will be finally approved in Parliament, European Parliament, somewhere in the next weeks. But we also talk about the proposal to publish effective tax rate based on accounting profits, which is part of the European framework for corporate taxation. So I think all of this is imposing an enormous challenge for the tax function. And yeah, then I have the $1 million question, Jens, for you. What can a tax function do with it? What is your experience in practice?
Yeah, thank you, Peter. A tax function can in fact do a lot in relation to managing their data, but it's also important to spend sufficient time on the strategy part as well. When we look into data management, small automation, or even the deployment of new tools, it's not a one-year project, but it's taken a lot of time when companies are looking into that one. In practice, we see that the tax function is not the owner of the data itself, but the tax function is rather the user of the data, and that one comes with particular challenges in terms of change. I think that we see that it is important when an existing ERP system is being upgraded or a new ERP system is being implemented by a multinational group. It's important that the tax function should be clear about the requirements he or she has from a tax perspective in order to start the conversion and get the most results out of the new ERP system. It's preferred that the tax function is being involved before the process of the revisiting of the ERP system starts and not after it's already started. Because it's important that tax functions should be able to familiarize with the available solutions on the market and how these can be integrated with the ERP system. As Kim already mentioned before, the move of companies to integrate multiple GAAP into ERP environment provides excellent data to deploy tax accounting tools or to remove spreadsheets from the process. We see that, for example, when we have a bridge from US GAAP to local GAAP. In this respect, some examples of items which the tax function can already do before the new implementation of the ERP system is looking in, for example, a tax-sensitive chart of account. This not only on a global level, but also on a country and even or on an entity level, in order to be able to support the tax accounting and compliance process as much as possible. Here it can be analyzed, the existing temporary differences and the permanent differences can be analyzed in order to have the main gap to stat and the stat to tax differences across entities to have a transparent setup of the various ledgers and to be able to automate to the maximum extent possible. And this automation can only be helpful for the preparation of the tax provision as well as the tax returns, given the tight deadlines multinational groups are confronted with. Also, what we see in practice is that there's a lot, in a lot of cases, it's the case that there are resources which are not always available and an increased requirements in reporting, even evolving to real-time reporting. We also see in practice that a lot of multinational groups should report within a few days after the finalization of the pre-tax figures. And this comes together with a decrease of the effective preparation of the tax provision itself, while sometimes the central review time is increasing, which are all, of course, challenging in case no automation is available.
Okay, yeah, thanks, Jan. So I see the point clearly. So the train, let's say, has left the station of shorter deadlines, challenges to report, of course. And I also got your point that if you have the luxury of making sure you are involved in the ERP implementation, you can do a lot of things, a tax-sensitive chart of accounts and other stuff. But sometimes, the ERP system is there, or there's just no room to do anything. And I imagine there must be other solutions and possibilities there as well for companies to automate the tax function. Tom, based on your experience, what can you share on this point?
Thank you, Peter. I think indeed using a company's ERP implementation and making sure that you can access the data which is in the ERP as a tax function is an important element in terms of tax technology. I see companies linking the company's ERP and tax accounting applications to facilitate the determination of permanent and temporary differences in the tax calculation and subsequently in the consolidated income tax provision. But also data from the ERP system provides relevant in other submissions to be performed by the tax function. Now, in addition to the company's ERP and tax accounting tooling, I see tax functions using data and analytics software as well as visualization tools. They are often used to perform controls over what has been documented in the company's tax control framework as risks to the company and how they are managed. Additionally, I also have quite some clients to build automated workflows that convert, clean, and complement data coming from the ERP tool or other applications such as the staff system to prepare tax returns or other relevant returns that needs to be submitted to local governments. I also see more recently tax and legal teams working together on e-signatures and similar. The recent trends of tax authorities going digital make it a bit more difficult to be able to access data or information coming from the tax authorities, or make it even more complex to submit a return, a tax claim, or even a payment towards the tax authorities, giving rise to fines. So I think their legal and tax teams are working together to see how they can enable technology to make sure that every request which comes from the tax authorities is being received and allocated to the appropriate responsible, and the other way around, how the appropriate responsible can ensure the necessary accesses to e-government applications in all jurisdictions where they operate, so they can ensure timely submission of the tax return. And I think from the standard toolkit of a tax function, I see that they use applications to store documents, to keep track of deadlines and the responsibles for the deadlines, but also has a kind of survey possibility to capture data from local subsidiaries and to have a consolidated report over the submitted data, which is requested on an ad hoc basis.
Okay, thanks for sharing that, Tom. Interesting to see that a lot can be done, even if ERP systems are already in place. There's a lot that can be done. We're moving towards the end of the time we have for this podcast. It has been very interesting what I heard so far. Perhaps there's time and room for some closing key messages, remarks. Kim, shall we start with you?
Yes, and we've said it a few times before, but it's so important because I'm confronted with it every day. As a tax function, you just need to make sure that you have a seat at the table when any new ERP is being set up or being transformed. It is such a hot topic today because SAP is moving to S4HANA and Oracle to Oracle Fusion. So the tax function just needs to make sure that they have a clear view on their needs and communicating those in order to make sure that all of the inefficiencies and the issues in the processes that the company faced before are resolved and that they are ready really for what the future brings.
Yeah, thank you. And it's indeed difficult to provide with a comprehensive list, but I would certainly think about the fact that every company should organize their operations in such a way that they will always be able to correspond with the tax authorities in every country where they are operating. For example, in Belgium, we have the MyMinfin platform, since the Belgian tax authorities are evolving towards the digitalization of their structure. And yeah, every company should have access to the MyMinfin platform. And together with that one, it's important to ensure that access is available to technology that is able to convert, cleanse, and complement data in order to be able to submit those documents in the required format with the Belgian tax authorities or the foreign tax authorities via those platforms. And the third takeaway should be that companies should have a relevant tax control framework available to manage these items, responsibilities, as well as the deadlines, but also the broader tax risks of the company, and ensure that such controls are tested by using, amongst others, data analytics and visualization tooling.
Thanks, Kim Jens, for this concluding remarks. And yeah, it was a very interesting discussion, I think, and I hope the audience can take some ideas from this podcast with them to improve tax functions. We're at the end of the podcast, so thank you a lot, Kim, Jens, and Tom, for sharing this. You mentioned tax control framework. I just want to make some publicity for the podcasts. Previous podcast where Annelies Boutaille, a close colleague of mine, talked about tax control frameworks and was sharing some insights. So if you're interested, that podcast is still available. This podcast series can also be automatically pushed to you if you register for it on Spotify, Google, or Apple. So I thank you for joining, and with that, I will end the podcast. Thank you.